We have breaking news. A New York appeals court has thrown out a $500 million fine in a civil fraud case against President Trump, his family, and his company. The court upheld a lower judge's ruling that found Trump liable of fraud by inflating his wealth to secure better business deals, but called the monetary penalty of more than $515 million excessive. Chief Investigative Correspondent Aaron Katersky is here with more. So, Aaron, what went into this decision?
This is a 323-page opinion from the Appellate Division's First Department, and the judges are not in agreement here, but it appears they have found that after a 3-month trial, the judge, this was a bench trial, the judge, Arthur Engoron, correctly found that Trump, his eldest sons, and his business perpetrated a decade's worth of business fraud by hyping the value of Trump's assets to include his apartment in Trump Tower. They said it was triple its actual square footage.
All right, I need you to picture something for a second. Imagine waking up tomorrow and seeing this headline: Trump Tower seized by New York State. His golf courses locked down, his planes grounded, his bank accounts frozen, everything he built over decades gone in a matter of days. Now I know what you're thinking. That sounds crazy. That sounds impossible. That could never actually happen to a sitting president. But here's the thing, and this is what most people don't realize. We already came incredibly close to watching exactly that scenario play out. Like way closer than you probably know. This isn't some fantasy I'm making up for clicks. This almost happened earlier this year. And the only reason it didn't happen is because a court stepped in at the last minute and gave Trump a lifeline. So today, we're going to break down exactly how close Trump came to a total financial collapse. And we're going to ask the question that everyone should be asking right now. What would actually happen if courts and banks moved on his assets at the same time? Because the pressure hasn't gone away, the judgments are still there, the legal bills keep piling up, and the financial walls around Trump's empire might not be as strong as he wants you to believe. But before we go any further, real quick, let's be honest. You can't really trust mainstream media anymore. That's why we built Pump Politics, to bring you real stories, real context, and no corporate spin. If you want to stay ahead of the headlines, join our free newsletter. We'll send the news straight to your inbox every day. Just click the link in the description to join. And if you just want to support what we're doing, join us, be part of the community that actually cares about the truth. All right, let's get back to the video.
Found liable on February 16th for fraudulently inflating his net worth to secure better loan and insurance terms. He originally needed to post a bond for $454 million, but an appeals court on March 25th halted Justice Arthur Engoron's judgment, requiring him to pay a reduced sum within 10 days. A 3-judge panel will hear Trump's appeal, and the reduction of the bond does not indicate how the panel will rule. The bond protects Trump's properties, including the Trump Tower, his 370-acre resort and golf course in Westchester, and his Mar-a-Lago estate in Florida from seizure by New York Attorney General Letitia James.
Let me take you back to March 2024. This was right in the middle of his civil fraud trial in New York. The judge had already ruled against him. Trump owed a massive judgment that had ballooned to around $454 million when you added in the interest. And here's how these things work. When you lose a case like that and you want to appeal, you have to post a bond. That bond is basically a guarantee that you can pay the judgment if you lose your appeal. It's supposed to be routine for someone who claims to be worth billions of dollars. Just call up a surety company, put up some collateral, get the bond, and fight the case in appeals court. Simple. Except it wasn't simple. Because Trump's lawyers went to court and admitted something stunning. They told the judge that around 30 surety companies had refused to back Trump's bond. 30 different companies looked at Donald Trump, the guy who wrote The Art of the Deal, the guy who claims to be one of the greatest businessmen in American history, and they all said, no thanks. We don't want to take that risk. We don't trust that he can pay this back. Think about what that means for a second. These are companies whose entire business model is taking on risk in exchange for fees. They do this all day, every day. They back bonds for all kinds of people in all kinds of cases. And 30 of them looked at Trump's finances and said, we're not touching this. That's not normal. That's not what happens to actual billionaires. That's what happens when the people who analyze risk for a living look at someone's books and see problems, big problems. And Trump's lawyers admitted this in open court because they were trying to explain why they couldn't come up with the full bond amount. They were basically telling the judge, look, we tried everything. Nobody will work with us. Please don't let the state start seizing his buildings. And that's exactly what was about to happen. New York State was preparing to move on Trump's assets. We're talking about properties that have defined his brand for decades. Trump Tower on Fifth Avenue, his penthouse apartment, his office building on Wall Street, his aircraft, his golf courses. All of it was on the table. The Attorney General's office was getting ready to start the seizure process. They had the legal authority to do it. The judgment was final at the trial court level, and Trump couldn't come up with the money to stop them. This is the guy who tells everyone he's worth $10 billion. The guy who built his entire political identity around being a successful businessman who knows how to make deals and manage money. And he couldn't convince a single surety company to back a bond for less than 5% of his claimed net worth. Let that sink in. Either 30 companies are all wrong about Trump's finances, or Trump's finances aren't what he says they are. Now, spoiler alert, Trump didn't lose his buildings back in March. An appeals court stepped in and cut the required bond from $454 million down to $175 million. They also gave him more time to come up with it, and eventually he posted that reduced bond and stopped the seizure process for now. But here's what I want you to understand. The underlying judgment is still there, the legal pressure hasn't disappeared, and the fact that he came that close to financial collapse tells us something important about how fragile his empire might actually be. So let's dig into this. Let's talk about what almost happened, what could still happen, and what a real Trump financial collapse would actually look like. Okay, so let's really get into the details here, because most people heard the headlines back in March and then moved on with their lives. They saw something about Trump and a bond in New York, and they figured, oh, another legal story, and they kept scrolling. But if you actually understand what was happening behind the scenes, it's way more dramatic than most people realize. This was a genuine financial crisis playing out in real time, and the only reason Trump's buildings are still standing with his name on them is because an appeals court decided to throw him a lifeline at the last possible moment. So let me walk you through exactly what happened, and then we're going to talk about why this matters going forward, because the danger hasn't passed. The judgment is still there. The appeals process is still ongoing, and if things go badly for Trump in the courts, we could be right back in seizure territory before you know it. So here's the situation Trump was facing. He lost the civil fraud case. The judge ruled that Trump had systematically inflated the value of his assets for years to get better loan terms and insurance rates. This wasn't some minor paperwork violation. The judge found that Trump's financial statements were basically fantasy documents, claiming properties were worth way more than they actually were, and then using those fake numbers to get hundreds of millions of dollars in loans that he wouldn't have qualified for otherwise. The penalty for this was massive. We're talking about $454 million when you add up the judgment plus the interest that kept accruing while the case was being resolved. And under New York law, if you want to appeal a judgment like that, you have to post a bond for the full amount. That's not optional. That's how the system works. You can't just say, I disagree with this ruling, and refuse to pay while you fight it in court. You have to put up money or collateral to guarantee that you can pay if you lose your appeal. Now here's where it gets interesting. For most rich people, this would be annoying, but manageable. You call your banker. You call a surety company. You put up some real estate as collateral. You pay a fee, and you get your bond. The whole point of being wealthy is that you have options when you need money. But Trump couldn't do it. His lawyers went to around 30 different surety companies. These are the companies that specialize in providing bonds for exactly this kind of situation, and every single one of them said no. They weren't willing to back a bond for Donald Trump. Think about what that means. These companies exist to take on financial risk. That's literally their business model. They charge you a fee, and in exchange, they guarantee your bond. They do this for thousands of clients and thousands of cases. And 30 of them looked at Trump's finances and decided the risk was too high. The guy who claims to be worth $10 billion couldn't convince anyone to back a bond for less than $500 million. That's a huge red flag about the actual state of his finances. So Trump's lawyers went to court and basically begged for help. They filed documents explaining that they had tried everything and couldn't secure the bond. They asked the court to reduce the amount or give them more time or come up with some alternative arrangement. And while they were doing this, the clock was ticking. Because once the deadline passed without a bond in place, New York State had the legal authority to start seizing Trump's assets to satisfy the judgment. And the Attorney General's office was ready to do exactly that. They had already identified specific properties they could go after. Trump Tower, his famous headquarters on Fifth Avenue with his gold-plated penthouse apartment. 40 Wall Street, his office building in the financial district. His golf courses, his aircraft. All of these were potentially on the chopping block. State officials could have started the process of taking control of these properties, putting liens on them, potentially forcing sales to collect the money Trump owed. And that's when the appeals court stepped in. Just before the deadline, they issued a ruling that dramatically changed Trump's situation. They cut the required bond from $454 million to $175 million. They gave Trump 10 extra days to come up with the money, and they temporarily blocked the state from taking any enforcement action while Trump figured out how to post the reduced bond. This was a massive gift to Trump. Instead of having to come up with nearly $500 million, which he clearly couldn't do given that 30 companies had refused to help him, he only needed to come up with $175 million. That's still a huge amount of money, but it's way more manageable than the original amount. And eventually Trump did post that $175 million bond. He put up cash and collateral and satisfied the court's requirements. The seizure process was halted, his building stayed in his control, and most people stopped paying attention. But here's the thing that people need to understand. This isn't over. Not by a long shot. The $175 million bond is just a temporary measure while Trump appeals the underlying judgment. If he loses that appeal, if the courts ultimately uphold the finding that he committed fraud, he's going to owe the full amount plus interest. We're talking about potentially over $500 million at this point, and he's going to have to pay it. If he can't pay it, we're right back to asset seizure territory, except this time there might not be an appeals court willing to bail him out again. The judgment would be final. The options would be limited. And New York State would have every legal right to start taking his properties to satisfy what he owes. So when you hear me talking about Trump's financial collapse, I'm not making up some hypothetical scenario out of thin air. I'm talking about something that almost happened a few months ago, something that could still happen depending on how the appeals process goes, and something that reveals a really important truth about Trump's finances, which is that they might not be anywhere near as strong as he wants people to believe. Because if he was actually worth $10 billion, if his businesses were actually generating the kind of cash flow he claims, he would have been able to post that $454 million bond without breaking a sweat. A $10 billion net worth means you should be able to access liquidity pretty easily. You should have banks and surety companies lining up to work with you. You should have options. Trump didn't have options. He had 30 rejections and a desperate plea to the court for mercy. That tells you everything you need to know about the gap between his public image and his financial reality. And here's what makes this even more interesting. All of this is happening while Trump is also dealing with massive legal expenses from his criminal cases. Multiple trials, multiple legal teams, lawyers who charge hundreds of dollars per hour, working around the clock for months on end. Some estimates suggest Trump has spent over $100 million on legal fees in just the past few years. That money has to come from somewhere, and if his businesses aren't generating as much cash as he claims, and if his assets aren't worth as much as he says, then every dollar he spends on lawyers is a dollar that brings him closer to a genuine financial breaking point. Now, I want to be really clear about something here. I'm not saying that Trump is definitely going to go bankrupt tomorrow. I'm not saying that his buildings are going to be seized next week. What I'm saying is that the financial pressure on Trump is real, is documented, it's been acknowledged in court filings, and it's not going away. The judgment from the fraud case is still out there, the appeals process is still ongoing, and if things go badly for him in court, everything we saw in March could happen again. Except next time there might not be a last-minute rescue from an appeals court. Next time we might actually see Trump Tower with a court-appointed receiver instead of Trump's name on the door. Alright, so let's break this down into the key points you need to understand, because there's a lot of noise out there about Trump's money and Trump's businesses and what's real versus what's just political spin. So I'm going to give you the facts, the documented stuff that's actually in court records, and then we'll talk about what it means going forward and why this matters for everyone, not just people who follow Trump. Point number 1, the bond crisis revealed that Trump's finances are not what he claims. This is the most important takeaway from everything that happened in March. When you claim to be worth $10 billion and you can't convince a single surety company to back a bond for less than $500 million, something doesn't add up. These are professional risk assessors. They look at financial statements and assets and cash flow, and they make determinations about who they're willing to work with. And 30 of them looked at Trump and said, no, that's not a conspiracy. That's not political bias. That's 30 separate companies independently concluding that Trump's finances are too risky to touch. Either every single one of them is wrong, or Trump isn't worth anywhere near what he says he is. And given that a judge already ruled that Trump systematically inflated his asset values on financial statements, the second explanation seems a lot more plausible than the first. Point number 2. The legal pressure on Trump's finances is ongoing and could get much worse. The $175 million bond was a temporary fix. It stopped the immediate seizure process while Trump appeals the fraud judgment, but if he loses that appeal, he's on the hook for the full amount plus interest. We're potentially talking about over $500 million, and there's no guarantee that any appeals court will cut him another break. If that happens, he'll have to come up with the money somehow. And if he can't, asset seizure becomes very real. New York State has the legal authority to go after his properties, to force sales, to take control of his buildings, to satisfy the judgment. This isn't speculation. This is how the legal system works. If you owe money from a court judgment and you don't pay, the state can take your stuff. And that applies to presidents just like it applies to everyone else. His properties aren't magically protected just because he's in the White House. Point number 3. The market environment makes everything more precarious. Here's something that doesn't get talked about enough. Trump's real estate empire is heavily dependent on debt. He borrows money against his properties. He refinances loans. He uses leverage to maximize his returns. That's fine when the economy is strong and credit is easy to get, but we're in an uncertain moment right now. Recession fears are rising. The stock market has been volatile. Interest rates are elevated, and banks are getting more cautious about lending, especially for real estate, especially for borrowers who have shown signs of financial stress. If Trump needs to refinance loans on his properties, or if he needs to borrow money to pay legal judgments, he might find that the banks aren't as friendly as they used to be. The same dynamic that led 30 surety companies to reject him could apply to his banking relationships too. And if he can't access credit when he needs it, his whole financial house of cards could come tumbling down pretty quickly. Point number 4. This undermines Trump's core political brand. Everything Trump does politically is built on the idea that he's a successful businessman, a deal maker, a guy who knows how to manage money and create wealth. That's why people trust him on economic issues. That's why they believe him when he says he can fix the economy or negotiate better trade deals or bring back jobs. But what happens to that brand when people learn that 30 companies refuse to do business with him? What happens when people understand that he almost lost his buildings because he couldn't come up with the cash? What happens when court documents reveal that his financial statements were full of inflated numbers and fake valuations? The guy who wrote The Art of the Deal couldn't even close a deal with a surety company. The guy who claims to be worth $10 billion had to beg an appeals court for help because he couldn't come up with $450 million. That's not a story of success. That's a story of someone who's been living beyond his means and finally getting caught. Now, what could actually trigger a full collapse? Let's talk about the realistic scenarios here. The most obvious one is losing the fraud appeal. If the appeals court upholds the judgment or even just restores a bigger chunk of it, Trump would have to come up with hundreds of millions of dollars pretty quickly. Given what we saw in March, that's not something he can easily do. He'd have to sell assets, he'd have to liquidate properties, and in a forced sale situation, you never get the best price. You're under pressure. Buyers know it, and they lowball you. So Trump could end up selling buildings for way less than they're worth, which would make his overall financial situation even worse, which could trigger problems with other loans and other creditors, and the whole thing could spiral pretty fast. Another scenario is a credit crunch. If banks decide they don't want to keep lending to Trump, or if they demand that he pay back existing loans, he could be in serious trouble. Real estate empires run on debt. If the debt gets called, or if you can't refinance when loans come due, you have to sell properties to pay the banks. And again, forced sales mean bad prices, which mean a worsening financial picture, which means more pressure from more creditors. This is how real estate collapses happen. It's not usually one big thing. It's a cascade of smaller problems that feed into each other until the whole structure can't hold anymore. And here's the wild card that nobody's really talking about. What happens if Trump's legal problems keep multiplying? He's already spent over $100 million on lawyers. He's already tied up $175 million in a bond. He's already facing a judgment that could be over $500 million. What if there are more lawsuits? What if there are more judgments? What if the legal bills keep piling up year after year? At some point, even if each individual problem is manageable, the cumulative weight of all of it becomes too much. And that's when you see someone who appeared to be wealthy suddenly revealed as being broke. Because wealth on paper is very different from cash in hand. And when you owe more than you can pay, the paper doesn't save you. So where does this leave us? Look, I'm not predicting that Trump's buildings are going to be seized next month. I don't have a crystal ball. What I'm telling you is that the financial foundation under Trump's empire is way shakier than most people realize. The bond crisis in March pulled back the curtain and showed us that 30 companies think he's too risky to work with. The fraud judgment showed us that his financial statements were full of inflated numbers. The legal bills show us that he's hemorrhaging cash to lawyers while his businesses face ongoing pressure. All of these things add up. And if even one more big thing goes wrong, if he loses the appeal, if a bank calls a loan, if another lawsuit results in another judgment, we could be looking at a genuine collapse, not a metaphorical collapse. An actual tangible Trump Tower getting seized by the state of New York collapse. And that's the story nobody's really telling right now. Everyone's focused on politics. Everyone's focused on what Trump says and what he tweets and what his latest controversy is. But underneath all of that noise, there's a financial reality that doesn't care about politics. Courts issue judgments, bonds come due, loans need to be repaid, and if you can't meet your obligations, It doesn't matter how famous you are or how powerful you are, the system will eventually catch up with you. That's what we saw starting to happen in March, and that's what could happen again if Trump's luck runs out. All right, that's going to do it for this one. Drop a comment below and tell me what you think. Do you believe Trump's finances are as strong as he claims? Or do you think the bond crisis showed us something important about the real state of his empire? I want to hear from you. And make sure you're subscribed, because next time we're diving into the latest developments in all of Trump's legal cases and what they mean for his second term. There's a lot happening right now, and you're going to want to stay informed. Until then, stay engaged, keep asking questions, and I'll see you in the next one.